Say if we look at Oklo, for example, it's one of them. So its crash actually happened continuously, but actually right now we're on November 6th. So it actually, we're halfway through the crash already. And it's still up, which is pretty good. We're still making money. We're still up, even though the market crashed, which is pretty damn good. And then NuScale, September, October, November, still has some more room to fall. And then Bloom Energy, November, it was actually up, which is interesting. It actually went differently than the rest of them. And then it's going to fall. And Lam Research, this thing just didn't fall at all. It's like this definitely did not. This actually feels like one that I should buy. This seems like a good stock to buy because like even in November it didn't crash. So it's almost through the worst of it at this point, and it's still not down. We're still up with this strategy, which is pretty impressive actually. The fact that the market crashed and this thing is still like actually flat, that's actually pretty interesting. Okay, so we kind of got to wait for this thing to finish before we can analyze it. So it's another 13 minutes. So what do you guys think so far? What are your thoughts so far about this?
Pretty awesome. We got to figure out how to feed stocks into it, and then we got to figure out, I guess, how is it taking profit? Is it
It's a good question. How does this take profit? Collecting rent. The bot takes profit every 7 to 14 days by selling the short call. This is probably why we're actually not down that much, because actually making money on these short calls. The only thing that ejects you from a trade right now is a 10% stop loss on a stock price. So there is a 10% stop loss on the stock price. So there is a stop loss. But wait, so we never sell the long calls. Won't that just make them eventually hit zero? We should be selling them at some point. That's a great catch. You're 100% correct. If we just hold the long calls forever without a plan to sell them, the theta time to gain will eventually eat all the value, and they could expire at $0 if a stock doesn't keep moving up. But I guess we're buying them in the money, so we have less of a risk of that, right? Stop loss hits, the stock drops 10%. We have to eject, it expires. How we fix this, a harvest path to make sure we actually lock in those rocket ship gains and don't let the options expire worthless. We should add 2 specific rules to the bot. We can tell the bot if the total value of the thing is up 25% or 30%, sell everything immediately. So this is a take profit. Or we could do a time-based exit, avoiding the theta cliff. Long haul is less than 21 days left until it expires. Sell it and roll to a new future. I would argue to do this one. What do you guys think? So So you do a profit target, or we could just sell before it expires.
I think you want out of it before you get somewhere between 45 and 30 and 45 days to get out of it before the theta starts to become a factor.
Gemini's saying 21. Yeah. We could up that. We could do more than that, right? We could do 28. We could do 35, 42. It's like multiples of 7. I don't know. It's suggesting 21. I don't know what the optimal time exit is. Why don't we discuss that? I think that time exit makes more sense. Are you sure 21 days is the best? Please research what the best length of time would be before the sell. How do they compare? Yeah, and I think by November 21st, I think it's basically through the worst of it now. This is about as bad as it's going to get for this strategy. And then it's up from here. Or I guess, yeah, actually, a lot of these actually shot up after this. November 21st, Oklo. This one hasn't recovered yet at all. Although there was this nice jump here. We'll see that. SMR, yeah, still hasn't recovered either. All these haven't recovered. Bloom has. November 21st, that's about, still goes a little lower. This one just doesn't. So maybe it gets a little worse than this. Okay. 45 days is a sweet spot. That's what you were saying, right, Gil?
That's what I've always read. It's after you get between 30 and 45 days, whether you're on a, depending on whether you're on a full expiration date or it's an interim, whatever, sometime after between 45 and 30, you should get rid of it.
Yeah, that's what it's saying now after doing some research. I did a bit of safest aggressive. See, I think I did some searching on this. Did I search? Oh, I didn't actually search, but I checked on the back test. Okay. But the problem is that if we sell it at 45 days, I mean, we're buying, I think, 60 to 90 days. 30 to 45 days sounds best, but isn't that also close to the expiration time frame when we buy? Right? Because if we're going to buy it 60 days out and then sell 45 days out, what's the point of that, right? Like you're going to just get eaten alive by, trading. Okay, you're spot on. If we buy 70 days and sell at 45 days, we only have 25 days of runway. It is way too short. You'll be paying traditional trading fees and spreads to roll your position every 3 weeks, which would eat up all your profits. Exactly why I recommend moving the entry further out. All right, so entry target right now is 70 days. Move it out to 180.